Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, to discuss U.S. equities taking the #1 spot, sending international equities to #2. Chuck, it's great to see you as always. Welcome back to Trade Talks. And we think about our asset class rankings. It's been some time since U.S. equities had the top spot.
Yeah, it has been. It's been quite a while. And it's hard to imagine, looking back to the end of last year, I don't think too many people would have said that this is where we'd be in August of 23, but here we are. I guess it's no surprise, looking at the kind of year that the U.S. equities have had. I think through last night, the S&P is up about 17%. Nasdaq 100 is up, something like 39%. And that's after having, moderate pullbacks here recently. But yeah, now, U.S. equities is at #1. I think it's going to be interesting to see what happens going forward. This is kind of where the market, or where we've gotten used to the market being, at least let's say over the last 10 to 15 years. More often than not, the U.S. equities is at the #1 spot, and you have things like technology or different sectors like that, up around the top of the sector ranks. So that's kind of my question: Are we going back to that mode, or are we going to be in a different kind of bull market, or it's going to be interesting to see what happens going forward.
And technology still remains at the top as it relates to sectors.
It does, yeah. With the Nasdaq 100 being up nearly 40%, it's hard for it to be anything but #1, right? But yeah, we've got technology at #1, industrials at #2, basic materials at #3. Probably, looking at the sector rankings, the more interesting thing that happened this month was energy moving up. Energy's been around the bottom of the ranks most of the year after having a great year last year. But the move in oil this month, or really I should say the last 2 months, was up nearly 20% over the last 2 months, and so that moved it up to the #6 spot from #10. Still not in the top half where we'd like to see it to be a more investable sector, but it seems like it's headed in the right direction.
And what about international equities? It's #2 for the month, but they still held up quite well. Yeah,
they still did well. Just because something falls to #2 doesn't mean it's uninvestable. It's just that again, how do you beat U.S. equities this year? Looking at the the overall benchmarks there, I think the ACWX is up something like close to 11% for the year. Still performed well over the last month even. It's just U.S. has just been so strong. Within the international space, though, we've been seeing this all year. Emerging Europe still at #1. It really just got stronger over the last month. We saw some of those countries, and when I say emerging Europe, I'm talking about places like Turkey and Hungary or Greece, kind of that Eastern European area. We saw some of them posting returns north of 10% for the month. So, as usual, international is the type of place where even if it's, kind of flat for the month, there's always something working there if you know where to look.
And how about fixed income? How has it fared?
Yeah, fixed income, has been tough. Obviously, last year was tough. This year is better, but the way that the yields have been moving has been really difficult. The 10-year is now back above 4%. I think last I looked today, it's almost at 4.2. So that's been a drag on the fixed income market for a little while. I would say looking at yields, the first sign of reprieve would be if we could see the 10-year drop to about 3.95%. And a more substantial break would happen if we move down to about 3.75. But as usual, with fixed income, there's always other things going on. It's not just about rates. Looking at less rate sensitive sectors, so things like high yield and whatnot have been really the places to be. It's been #1 all year in our rankings. It's up 6% year to date. And really it was the top performer last month. It was up about 1% for the month. So.
All right, and to wrap up here, how about commodities? What are you seeing there?
Yeah, I mean, commodities, haven't had a whole lot going on, the majority of the year, but the past couple of months, they've really started to come on. The main commodity benchmark that we look at is up about 7.2% for the month. And a lot of that comes from oil, like I mentioned before with the energy sector and stocks. The move in oil, catapulted energy back to the #1 rank in commodities. from the number 3 rank. It just bypassed number 2, went straight to number 1. And we've seen agriculture kind of pull back to number 2 and precious metals to number 3 to make room for it. And looking at oil, it's kind of overbought over the short term. So, wouldn't be surprised to see a pullback, probably into the 70s. That'd be completely normal here. But I think it'll pay dividends to see what happens after that. Is this kind of the start of a bigger move up like we've seen before in the past, or is this just kind of a blip on the radar? We're headed back down.
All right. Appreciate the insight as always, Chuck. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.